So that was good. The Japanese intervened. They're selling dollars, selling of dollars, intervention of liquidity. So there was a lot of liquidity came back in. And the point being is what we saw with the markets drawing down was liquidity coming out. What happened today and yesterday in crypto, it kind of figured this out immediately, was liquidity is coming back. So that's really the big driver here. As I've said in the everything code work, is all of the central banks have to fund their government's debts, and they all have to work together.
Famous macro analyst and crypto lover Raoul Pal thinks cryptocurrencies and tech equities will do well. He believes the digital assets market offers unique opportunities for all investors. However, other knowledgeable investors are more cautious. Supporters expect the global banking system to collapse. My acquaintance claims that the next financial system is being constructed. He argues our leaders can kick the can down the road and make the adjustment smoothly until it's accomplished. Pal's exponential age theory is based on how swiftly technology moves, notably in robots, art, and AI. Pal argues an older population and lesser output worsen the world's massive debt. Pal feels our enormous debts are the problem because we don't make enough. AI and robotics will create limitless productive units and exponentially increase productivity, changing the GDP formula. An expert said AI increases knowledge and robotics scales physical effort. Thus, Pal believes that the exponential age's productivity rise will solve the debt crisis, enhance GDP growth, and prevent a worldwide collapse. However, he warns that the world will remain extremely different. In a recent interview with David Mattin and Imran Lakha on The Real Vision, Pal claims we only have 6 years to take advantage of the Bitcoin industry's opportunity. This YouTube channel covers cryptocurrency news, AI and AGI developments, and more. Enjoy the video. As we show clips from the video, please like it, subscribe to the channel, and switch on post alerts for more videos like this.
We think that liquidity is the biggest driver of risk assets and particularly growth assets. Crypto and tech are growth assets. If you remember, they led the cycle because they're driven by liquidity and not the business cycle itself, which is what drives stuff like the Russell 2000 or oil companies or gold miners. They're all driven by the business cycle. And we see that right now, the ISM is struggling to turn higher, and then we'll have an upcycle, and those stocks, those cyclical stocks, will do well. But technology way leads that by over a year. And if it's driven by liquidity, we need to understand what's happening with liquidity. And Mike Howell was with you last week, I think. Mike's always excellent on this. We produce a lot of work at Global Macro Investor and Real Vision Pro Macro on this. And it's liquidity in the US at its simplest level is driven by, it's called Fed net liquidity. It's driven by the balance sheet. Is it rising or falling? Well, right now they're doing QT, so they're taking liquidity out of the system, but that's offset with the reverse repo. They've been draining that. That money goes into the market, into the short end of the bond market. That's been adding liquidity, and that more than offset the Fed. Then there's Janet Yellen and her checkbook, the Treasury General account. That's her current account. And we had this liquidity withdrawal from the system based on the fact that there was a reasonably big tax season because the economy grew reasonably well last year. Those taxes come out of money market funds and go into Janet's checking account. So they're now not able to be used because Janet's not spending it yet. So that money comes out of the system. That's a liquidity withdrawal. Okay, so that's what was driving tech down and crypto down. Then what happened yesterday is two important factors. One is Jay Powell said, hey, listen, guys, we're not quite ready to cut rates yet. We're definitely not going to raise them, though, but we're going to do less quantitative tightening, but a lot less, from 60 billion down to 25 billion. So that's if you think of quantitative tightening as the Fed putting its head on the beach ball, you take it off, it rises. He's allowing liquidity to come. On the other side, Ellen said, well, what I'm going to do is I'm going to buy back some of these illiquid bonds at the long end of the bond market. Those illiquid bonds, that's just a recycling of liquidity into a less liquid part, but it's adding liquidity into the system. So both of them signaled, we want to add liquidity here. So that was good. The Japanese intervened. They're selling dollars, selling of dollars, intervention of liquidity. So there was a lot of liquidity came back in. And the point being is what we saw with the markets drawing down was liquidity coming out. What happened today and yesterday in crypto, it kind of figured this out immediately, was liquidity is coming back. So that's really the big driver here. As I've said in the everything code work, is all of the central banks have to fund their government's debts, and they all have to work together, and they all have to get interest rates lower, and they all have to put liquidity in, because if not, the numbers don't work.
That the world's financial system can't keep going and is close to falling apart is a well-known and agreed-upon fact. Analysts of Money Matters, economics, and safe money people on both groups agree that the world's debt is too high and that the fiat system will eventually become useless. Pal thinks that the only way to the global problem is rising output, which can be made much worse with AI and robots. A former Goldman Sachs executive recently wrote on the social media site X, "My job as a macro analyst and entrepreneur is to live in the future and figure out how the world might look. And the most likely way to get there. In the next 6 years, I think we will see AGI models getting faster and cheaper, and the economy will have infinite knowledge workers. What does an economy look like in that world? What is GDP? If someone trains AGI to trade on global markets, they should be able to get all the money. What if everyone starts using AGI models to build businesses? The speed at which businesses are created and destroyed will be unmatched." This was talked about with Mattin and Lakha. What the Real Vision CEO talks more about what's coming and how important it is to get ready. Now that you've taken a chance on coins, here are some more interview clips.
Listen to what he says, but listen to how he's saying and the context that he's giving. And this is what a discussion David and I have had at length that we go backwards and forwards on, is every time I listen to Sam Altman, his guarded manner of speak suggests to me their advancements internally within OpenAI are much further than people understand. It is my personal opinion that they are building AI software products with AI, which is why 500 people can be so fast across so many verticals and disrupt everybody every 3 months. We're going to have the OpenAI developer conference in this month sometime. My guess is and this is where David and I have been discussing this, my guess is going to be another step change. And every time, it was really interesting. I can't remember who was interviewing him, Lex Fridman, somebody. And somebody said, "Oh, that was a shock when Sora came out." He said, "Damn." He said, "We should have throttled back a little bit because we don't want to shock people too fast." Which makes me think, and I hear this language from a lot, he's super guarded. And what he's trying to play is a game of beating everybody, but not moving so fast that the regulators shut him down out of fear.
Exactly.
And then he's saying, "You need to regulate us," but he's moving so far ahead. It's a very clever game he's playing, as are others. Anthropic are doing the same. They're like, "You've got to protect everybody from the AI, but we're great. And
right.
We'll be okay."
Protect you against what you know. Meanwhile, we're doing a bunch of stuff that no one knows about.
You know, for those people who, there's another big discussion. We won't have the full discussion now, but this is so important. There's one company that David presented at the Global Macro Roundtable in Marrakesh week before last, TSMC, that is so important that nothing gets manufactured without literally nothing. And that is Taiwan. And this is what the whole China-US clash is about. It is so important that it's geopolitical. And we think there's going to be a resolution. I will write a bit more about it in due course. But this stuff really matters in the game of nation states, and it may even matter more than oil did. This is how big and important this is.
According to the founder and CEO of ARK Invest, the global equity market cap of 5 disruptive innovations will go from $19 trillion to over $220 trillion by 2030. This is a lot like Cathie Woods' prediction for the next era of exponential technology progress. The average growth rate for global GDP over the past 100 years has been 3%. Cathie thinks that artificial intelligence, blockchain technology, robotics, genomic sequencing, and energy storage will help to significantly raise it to at least 8.5% after 2030. This is at a time when economists are predicting a lower 2.6% average growth rate for global GDP over the next few years. Cathie and Pal both think that the fast growth and convergence of these disruptive platforms will completely change the path of the global economy. Do you agree with Pal that we can find a way out without doing any long-term damage to the financial system? Please leave your thoughts and comments below, and don't forget to subscribe to the channel and turn on post notifications to see more videos like this. Thanks for watching.